Welcome back. Now, thanks to continued franchise growth in its banking, insurance, and asset management businesses, at the half year mark, Standard Bank's headline earnings per share sits at just over 13 Rand, reflecting an increase of 4%. This could have been higher were it not for currency devaluations in its West of Africa operations. But it's worth noting that this segment of the business is responsible for 41% of the group's headline earnings of 22 billion Rand. The interim dividend, in the meantime, is up by 8%. Company CEO Tshabalala joins us with a closer analysis of the balance sheet. Good afternoon to you, Sim. Thank you for your time.
Thank you, Noltando.
Well, we know it's been a continued interesting economic environment. I imagine that, when you see the 4% increase in headline earnings or an 18.5% increase in return on equity, you're quite pleased with that performance.
Yes, we are, and I think you allude to this proposition. So headline earnings are up 4% in Rand, but they're up 17% in constant currency. In other words, if you just take the currencies relative to the relevant countries and you don't translate them into Rand, the franchise was up 17%. But the Rand is very, very strong relative to a number of currencies, as a result of which it results in 4%. That point applies to every single line item in our income statement and our balance sheet.
You did speak about currency, and I'm keen to actually maybe look at the rest of Africa operations and what we are seeing with currencies. Nigeria comes to mind, of course, Angola as well. Let's talk about just weathering the storm there and still managing to eke out growth in these operating environments that I think are politically charged at this time.
Well, things are politically charged. In the case of Nigeria, as you're aware, the authorities have reduced fuel subsidies, which have caused a lot of stress and pain. Interest rates have gone up significantly during the course of the year. All of these activities by the Nigerian authorities are calculated to normalize the fiscal and monetary position in the country, in particular to bring inflation under control. It looks like those efforts are taking effect. The inflation rate is starting to slowly decline, and one would expect it to decline even further in the second half of the year, off the back of the monetary policy stance that the authorities have taken. But as you allude to it, the social dislocation that has resulted is worrying and disturbing. They had in Nigeria what was called the 10 days of rage in early August as a consequence of the tough environment caused by the fiscal impact, as well as increased interest rates, high inflation and high interest rates.
So I also want to speak on South Africa. I think that also performing really well. We've seen active clients grow. We've seen digital clients also growing there. Let's talk about South Africa and maybe even looking at a multi-bank society. I imagine that it does look a little bit different to some of your other territories.
Yes, so one of the advantages that Standard Bank has got is that it is a portfolio. So you'll recall last year, the star performer in our operations were the operations outside South Africa. This half year, the star performer was South Africa. SBSA, you will see in our numbers, was up 12%. And it was up 12% as a consequence mainly of the performance of the retail bank, the business that we call PPB. The net interest income, the fees and commissions all looked good. However, we had pressure in our trading revenues. But remember, in 2023, in the half year of 2023, we had a very, very strong performance in the trading businesses at Standard Bank. But when you look at the business from a bottom line perspective, there's no question but that the South African operations were the best performers.
Let's also then speak about interest rates, and maybe we can speak about here at home. I think we have reached a new phase in the interest rate cycle, really. I'm keen to get your thoughts on how we're expecting that to affect, Standard Bank here. It looks like you guided well in terms of credit losses, and we are seeing a reduction there. But what does the future possibly look like?
Noltando, at a high level, our economists are expecting a decline of 100 basis points in interest rates over the next period. They're expecting, in fact, a cumulative 25% reduction from September onwards, so 25, 25, 25, 25. And that should be very, very good for customers. It'll improve people's ability to repay their loans. It'll give them greater cash flow, and it'll increase confidence on the consumer. However, we've already started to see that confidence from consumers. The latest print of retail sales that we saw an increase of over 4%, which is boding well for the health of the South African consumer.
I also want to speak about, a more liquid market as a result of interest rates fall. This is a global conversation. It means there'll be more liquidity out there. So it also means that competition for Standard Bank will increase, as many other banks and other financial institutions loosen their balance sheets slightly. How are we going to maneuver through that competitive environment?
You're right. We've already started to see that. You saw, private sector credit extension is higher than the rate of growth of Standard Bank's retail asset book. Our biggest book is our home loans book that grew at roughly 1%. And that's a combination of us being the largest in the market, and therefore competitors are competing more fiercely for the client base. And we're very disciplined at Standard Bank. If the transactions don't meet our hurdle rates, it does not make sense for us to do them. So the proposition that is embedded in your question is correct. You're seeing greater competition, and we are up to it. We are competing, but we are staying close to our customers. A point we've made, and you'll remember this during COVID, we stick by our clients through thick and thin, through good times and bad, as opposed to pulling in and out of markets. So many of the competitors that are back are competitors that had withdrawn during COVID. But that's the nature of competition, right? That's why we're proud South Africans. It's a fiercely competitive environment.
I'm actually glad you mentioned the issue of being a proud South African. So it's the first time I speak to you post-elections. Let's talk about just taking stock of our story as a SA Inc. We are seeing some renewed optimism. You've always been optimistic. I'm keen just to get your thoughts on what the future might hold and how you're thinking Standard Bank can even position itself for this optimism that is now out there.
So, Nolthando, thank goodness I'm just a humble banker and not a soothsayer. But I'm a humble banker who chooses to be rationally optimistic. The Standard Bank optimism has always been based on fact and data. And what is the data as we speak today? Well, we have a government of national unity that is composed of men and women that are very, very competent. And many examples one could use. One of them is just think about Mr. Parks Tau, who has taken the helm at DTIC. And you can go through that list of cabinet ministers. The next thing to think about is the commitment of the GNU to Operation Vulindlela, and indeed expanding Operation Vulindlela, accelerating the progress that is happening on electricity, the progress in transport and logistics, on crime and corruption, and on the other network industries, which, if they are to be successfully executed, we could then see trend growth, just like the Bureau of Economic Research is projecting, and just like many other economists are projecting, we could see growth of 2% in 2025, and we could see trend growth that is higher as a consequence of this diligent execution of rational structural reforms.
Awesome. That's all we have time for today. Always a pleasure speaking. Thank you so much for your time this afternoon. And that was
Real privilege talking to you.
Tshabalala, CEO of Standard Bank Group.